Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, guys and girls. So yesterday we have expressed some doubts on the perspective of the immediate upward reversal in euro currency, and we said that small chances that euro still will show the downward action just because there were some irrational signs of the price behavior on the lower time frames. So the bullish market should not behave in this manner, and currently it seems that that suggestion was correct, at least before the Fed statement, before the meeting. The technical picture shows proper action. So here based on the chart, as you can see on the daily chart, picture suggests that small chance that market will drop to the 2050 area, and maybe indeed we finally will get the sweet entry point around this confluence. Because currently on the daily chart you can see the market is forming kind of the flag. It's very small consolidation. So here it is forming, and in most cases it usually becomes the continuation pattern. It also stands below the broken trend line, so market is not returned back inside of the triangle. So the overall sentiment stands so that investors a bit frightened of the coming changes of the Fed policy. The idea that Fed will keep the position the same in June, July, August probably already is mostly priced in, because this is widely expected, and this is nothing actually new in this. And downside action here reflects that investors start pricing in or keep in mind the fear of the changing of the policy. In a weekly report we dedicated a lot of space to this subject, and come to the conclusion that the first action might happen from the Fed in September. This is not really too far from current moment, and its current position probably, I would suggest that even anemic reaction report from the Fed, the same mantras concerning the transition inflation and so on, probably could make less positive impact on the market. So maybe it will not calm down the investors in it and their fears. So it seems that market is aimed to reach the strongest support and low standing levels. At least by my opinion, it seems that really could happen. From that standpoint, if you'll take a look at the fall time frame chart here, we do not see something really special. Mostly the price action here confirms our suggestions that, take a look, yesterday market just spiked up this 2140 area, trying to pass this level, and we said that mostly the retracement after this one. This is not something reversal. Shows the retracement. Then was another attempt to go higher, but currently market is also returning down. This takes the shape some kind of the bearish dynamic pressures. Trend stands bullish by the MACD, but market just can't proceed high and starts forming upward actions, mostly turning to the flat. The only pattern that's bullish that we already mentioned here is some divergence here that stands, but unfortunately this divergence stands not at some strong support area. That's why it's not very reliable, and it is not consistent with the price mechanics, price behavior that we discussed. Here's in every leg down we have very strong sell-off. Here we explain why we think that this is not reversal, because here was a rational type of action for a bullish market. The bullish market should not show this type of action. After OP, especially when it gets so strong, so rational, it should continue upward action or shows a reversal. Once it hasn't shown it, it means that it's aimed to the downside, and this is confirmed. This scenario. Targets mostly to the downside stands the same. This is some range around 2060 to 2040, because here we have some targets, different targets. The major one is XOP, of course, but also we have this money target of the butterfly extension. In general, all of them stand around 2050-2066 conference support. Yesterday, we saw another signs of weakness on the hourly charts. If you remember our ABCD pattern here, we said, well, this acceleration probably should lead to the XOP, where we thought might be a chance to go short. But as you can see, market comes with even this minor task to proceed slightly higher and reach the XOP at the resistance level. It just even hasn't reached the OP for the few pips, turns down and erase this ABCD pattern because as you can see these lows below the C point. So this ABCD pattern is not valid anymore. With this price performance, I would consider maybe downside pattern. Here we could keep an eye on the 1618 butterfly that stands at the same 12061 area. So you can see lots of target stands around the same confluence support in the daily chart. And this is really a very good area to consider taking the long position. In the current situation, well, I do not see reasons to bet on upward breakout and go again the patterns that we have, because the only reason why this upward action could happen if Fed statement will be supportive and market could try to establish upward action. But mostly, everything supportive that Fed could tell is just to keep everything the same. But this hardly provide any significant impact on the market. The one thing that I'm also worried about it is just because, guys, this type action here shows you how the value of this Fed statement, because this action was in contradiction to the strong CPI numbers, particularly by the hoping on the Fed statement. But later, after the first reaction has happened, market shows the proper reaction to the COP numbers. And it just shows you how important the currently statement from the Fed. Its importance, its value is melting gradually. So that's why here, maybe if Fed even will keep everything the same, market try to show some upward bounce, maybe finally hit the 2170 that we discussed recently. If you remember, that was XOP. And potentially maybe we will not get the butterfly, maybe we will get this ABCD pattern right to the upside. Who knows? It might happen. But in this case anyway, this reaction probably will be very short term. And under pressure of the statistics, market later could reestablish downward action again. So currently, in this moment, in this place, I wouldn't consider taking the long position, because to really stay safe, we need strong level, and this strong level is 2050. So that's our current view on the euro currency.